Right. Okay. Awesome. So recording has started. Hello everyone. My name is Avin Savani from American Real Estate Group. We are here in Pennsylvania. Just wanted to quickly go over the asset management role in real estate. So really it depends on how your real estate firm is set up, what type of services that you guys provide. So it really goes down to your organizational structure. Primarily you would want to have like the roles set out. So it'd be kind of like the makers and the doers. So the makers would be like your acquisitions, your underwriting team, your also your like attorneys are going to be involved there, CPAs, accountants, and pretty much whoever is like sourcing all of these deals and doing most of the lead generation for the deals. That would be like the deal makers, right? So that can also involve like the architects and engineers, your interior designers, whoever is going to bring the plan together to present to the entire team, right? So really it's a matter of defining the roles within your organization. So that would be the makers. The doers, on the other hand, these would be like the asset managers, the property managers, the lease management staff, also including some other teams like the marketing department, and other people who are going to be more involved with like the management of like the assets, right? So really, if you look at like a balance sheet, right? Like you have plants, property, and equipment. So that's one of the main assets on your balance sheet. So it's really a matter of how do we effectively manage that and bring the most efficient performance from those assets, right? So if you're a smaller firm, you're understaffed, then you're going to have to take control of those plants, property, and equipment as much as possible. Otherwise, if you have tasks and responsibilities that you can delegate, then you can kind of space it out and coordinate more effectively that way. So it really matters about what situation you're in. Well, what are the amount of people, like employees in your staff, right? And how you can really kind of piece things together so that things move in a fluid motion, right? Yeah, so one of the main things, just a quick overview of how we do asset management here. It's really spaced out into like 5 or 6 categories. So we have financial and property analysis. So this is essentially making sure that like the P&L, other aspects of the financials for the properties are in stabilization, right? So you have like the in place pro forma, right? And then you have the stabilized pro forma, which is after like all the renovations, right? So you want to make sure that the financial and property analysis is updated, I would say, like on a quarterly or even in an annual basis. So you make these reports quarterly and annually, but also you keep a track of what's going on like on a weekly basis, like if your budget is kind of constrained and you need to kind of manage like the vendors accordingly, then you want to make sure that you're within your budget, right? So that's that. And then you also have construction management. So if you have a construction project manager on board, that's even better because they're more skilled in that aspect. But the asset manager can also perform that role too. So having a good background and understanding of the construction industry is really important. Understanding like the uniform construction codes, other areas where like you need to get approval, getting permits, going through township approval processes, right? All of that is kind of inclusive of the role. So really, it's also a matter of understanding the general contractor who you have on board for the rehabs and renovations. How do you kind of like screen them? How do you get on the same page? And like pretty much like you need to make sure that that's running like a lot smoothly, right? So really, it's um one of the biggest risks honestly involved like how do you find like the best contractor, how do you supervise or kind of oversee it like properly, because you want to make sure that that trust is built right at the gate, right? So having that like kind of solidified is really important. So construction management is a huge aspect in asset management. So yeah, and then the next thing would be lease management, right? So drafting all of the leases, doing the tenant estoppels, the SNDAs, and pretty much understanding each and every lease term there is within a lease, right? Rent schedule, rent escalation, security deposit, and other items like what type of lease, triple net, double net, net, right? Or full service gross. So different aspects within the lease is really important. And then having like a good kind of management software that you can actually track all of that, right? So we also utilize a landlord software to make sure that we're on top of our leases, we're communicating with our tenants, rent payments are being made through, right? On a weekly monthly schedule. And then also incorporating like a few other aspects such as the maintenance requests, and drafting all of the P&Ls on like a monthly basis, just to keep track. So I know QuickBooks does a great job of the accounting aspect. If you have QuickBooks, that's great. But you can also just do it manually too. But yeah, so those are leases. You also want to make sure that you're marketing properly, because one of the main things is that the asset management fee is going to be a percentage of the effective gross revenue, right? So if you have like a 3, 5, or 5 or 7%, even upwards of a 10% asset management fee, sometimes it's going to be a percentage of that effective gross revenue. Now, what is effective gross revenue? It's essentially all of your rental income, subtracting out any vacancies, economic vacancies, and adding also like other types of income, such as ratio utility billing services, parking, pet fees, right? All of those fees are added, and then you net out like the effective gross revenue, right? So that's like where the percentages are based for property management and asset management, right? So you want to make sure that this is like the main, like the huge important aspect of asset management. I know there's a lot, but like you want to coordinate with your property managers on a weekly basis, schedule those Zoom calls, make sure that you're on time, you're asking the right questions, especially if you have a third party management handling the property, right? You want to make sure that things are being addressed properly. So what are some aspects, right? So how is the property performing, right? What is the occupancy? Did they tour any new clients around, or tenants around, right, at the facility? And what are some ways that we can increase that occupancy and lower the vacancy as much as possible, right? So those are things that you want to kind of follow up with them. Obviously, also kind of go through some other aspects, such as like the leases too with them, because you're the one kind of overseeing like all the leases. So you want to make sure that people who are willing to stay in your facility are being screened properly. You're getting good like credit report checks, criminal report checks, and making sure that their business is also something that's valuable to the property, right? So you want to have a good tenant mix, right? So if you're in like an area where it's heavily dominated by, let's say, big box retailers, and some small retail brand is going to come in, you want to ask questions about their business model, right? Inquire about them, right? So that's where you get to know your tenants more on a relationship basis, and you establish that connection. So yeah, leases are really important. They're kind of like the bloodline of the pro forma, if you think about it. So yeah, so make sure that like leases are properly coordinated, managed, and you're on top of each phase, right? So yeah, those are leases. Lastly would be dispositions. So these would be properties that aren't performing as well. So if you see an underperforming property, address it right away. Understand what the problem is. So whether that be like a lower occupancy, people are just not coming to visit the property. There's a lower foot traffic, and ultimately like the revenue generation is not there, right? So you want to make sure that that's addressed efficiently. So so if you think about it, like if you have a property that's not performing well, you're not seeing that occupancy statistic that you want to, right? What are some marketing aspects that you can enact to make it a higher vacancy? I mean, a higher occupancy, right? So whether that be doing email marketing campaigns, I mean, handing out flyers is kind of an outdated practice, but you can try that as well. Especially if there's like a university around town, and you can, if there's some students who want to stay in like a multifamily, you can go out to them and hand out these flyers, right? So yeah, the digital marketing is really what's important. Is how do you effectively convey that message, like either through a website, through your podcast, through videos, social media? How do you kind of attract these tenants or more people to your facility, right? So that's one aspect that you want to see as great occupancy statistics. Um, I'm trying to think here. So uh, the asset management, is there any other statistic that you want to track with your property managers? Um, I'm sure there's a lot more. You can also go into the market's research aspect of it, like why is this location underperforming? Um, is there enough population, job growth? Is what is the median household income in this area? How's affordability, right? And also how is like the criminal activity? You want to make sure that that's kind of screened out properly. Um, and so, yeah, so you want to go through these market statistics with the property manager, because having a good knowledge and fundamental of your like market, your sub-market, tertiary market, whatever it is, right? You want to make sure that that's coordinated effectively. So yeah, dispositions though, and acquisitions. So both of those are kind of a different story. So you're gonna have to coordinate with your broker on this, whether it's a selling agent or a buyer's agent. So you want to make sure that you're keeping good communication relationships with your brokers, as well as your lenders too. Those are two huge aspects of the acquisitions and dispositions phase. So what we do is we kind of source all of our deals from different brokerage sites. They pretty much post all of their publicly listed properties on their sites. So we source all of those deals together. We incorporate that into our deal flow. So if you're kind of like lost of track of how to manage things like with a team, one of our work management software is called Monday.com. We use it. It's pretty efficient and pretty affordable. So that's a great source to use, because that you can create like project management boards, property management boards, deal flow boards, right? So these are all things that kind of drive the business workflow, right? So you want to make sure that you're incorporating software, any type of software really, just to make sure that you're accurately storing data, storing files efficiently, and making sure that phase by phase, whatever you're trying to accomplish is getting done like in a timely manner, right? So really it's a battle against time really, and especially when you're in that like beginning phase of getting these deals and kind of submitting like LOIs, but that's in the underwriting and acquisitions phase, so I'll get to that later. But let's stay on topic here. So asset management, right? So financial and property analysis. Really, it's say if you have a property that you just acquired, you acquired a loan on it too, and you have some type of renovation project going on in that, right? So it's going to take, let's say, the first year. So to roll the rent into the stabilized year, it's going to take like 12 months, right? So you need to coordinate with your construction manager really on a weekly basis, right? If you have a construction manager. If you don't, then you're going to do it yourself, right? So that means coordinating with the general contractor, being on site, telling them to walk you through what is the scope of work that you had in mind, the plan that you drafted either with your interior designer or by yourself, right? So really be like open and honest, right? Open communication is the best, right? So just convey what you're trying to accomplish with your project, and address all of the risks or that are associated, some bottlenecks or some type of blockade that might come into place later on, and see how you can overcome those barriers, right? So yeah, so that's that. And then the other thing I would say is just creating those quarterly reports is also really key. Making sure that like you're incorporating a little bit of market research into that too. Having good fundamentals is really important. So really, I just look for like 5 or 6 good things when I'm looking at a market. So I think I already mentioned those, like population growth, job growth, median household income, affordability, right? And other things would be landlord friendly areas, right? So a lot of states can have pretty strict rules for landlords or tenants. So you want to make sure that you're aware of what's going on. So like for instance, rent control, some states enact rent control. Um, so yeah, and then the other thing would be just like the I would say the criminal aspect of it as well. Making sure no like suspicious things have happened in your like I would say 5 mile radius in like the past like 12 months. That's really important. And then other statistics you can obviously look at is occupancy, vacancy, how the rents are doing, um, and how do you price really all of your vendors, right? So if you have a lot of vendors in place, that's another thing that I want to get into is vendors. So property managers are going to be more responsible for selecting and screening the vendors, and then it's the asset management's role to approve those vendors into your budget, right? So you have to coordinate with your property managers that, hey, we have a $10,000 budget for HVAC. We have a $20,000 budget for roof replacement, right? We have a $15,000 budget for the electrician, the plumber, right? Flooring, painting, whatever, right? So all of those aspects, just coordinate what the budget is, what is the actual, and then see how much you've kind of gained or lost in that aspect, right? Because all of these items affect the pro forma directly. So if you're looking at it, you really have like 5 or 6 main things from your underwriting. You have your property description, right? Number of units, parking spaces, location, year built, year renovated to. Then you have your investment cash flows. So all of the money that you spent on hard and soft costs. So your construction costs, your architect engineering fees, construction management fees, all of those hard and soft costs would be there. If you utilize financing, then you're going to pay some closing costs too. So being a good negotiator when with your lenders is also really important. So yeah, and then you have your operating cash flows. So this is really important. So having good I would say projections is also key. So whether it's, let's say you have it for rents, you have it for vacancy, you have it for post renovation rents, you can have it for operating expense ratio, operating expenses, and capital expenditures too. So like a 2% increase year by year or something like that. So having those projections in place so that you can adjust those is really important. And then you get down to your unit mix too. So whatever property it is, what is the unit mix? Like square footage details, rent per square foot per unit, right? Per month kind of thing. So having those statistics is really important. And then vacancy assumptions, 5%, 10% can really change the bottom line cash flows. Bad credit loss to lease, and other like losses that you can account for. And then obviously your operating expenses. So we have kind of a detailed operating expense. So we have our repairs and maintenance, we have our landscaping budget, we have our payroll, utilities, general administrative, and within those, it's broken down into subcategories, right? So everything that you need to effectively run like a multifamily business or like some big office building or industrial building, it's all spaced out in that underwriting. So yeah, and then lastly, obviously, would be insurance and property taxes. So having those in place is really important. And making sure and verifying what the property tax bill for your property is also key. So if you need to do like a property tax assessment, then you should coordinate with the township, right? And get that property tax bill lower than what it should be. So this all comes down to just like the nitty gritty details that can really affect like the returns on like a pro forma. So I'll get into the underwriting phase later on, but mainly for asset management, it's really just coordinating these 5 or 6 main aspects. So financial property analysis, construction management, leases, and dispositions, and coordinating with your property managers on a weekly basis just to get updates on what's going on. So yeah, um, I think that kind of went through it. I know there's a lot more that we can dig into because asset management is kind of a evolving space. You have different projects going on that you are really like out of the ordinary or some extravagant projects. So it can really get complicated. But if you have your team set in place, communication is really good. Then really it's just a matter of executing on each and every detail. So yeah, uh, you can also kind of go more into some entrepreneurial activities too with asset management. So whether that be like let's say if you are like a scaling business, then you have a good amount of assets under management. Then you can maybe also think about going like public with your company or establishing like the real estate investment trust status, right? So those are some things to strive for. And then I would also say just like the refinancing aspect of it as well is really important. So if you're on like a 10-year hold, your construction is ending the first year, you're going to refinance it after a first year after for a lower rate, then you're going to want to go through that refinancing process either with like the developer owner or also just like the underwriting team, or whoever is communicating more with like the debt and capital markets, right? So yeah, refinancing is really important because you can save a lot of money down the road if you refinance. So yep, and then this can work for literally any project, like whether it's small scale, like 15, 20 units, all the way up to like 100, 200, even 300 units, right? If you know how to, obviously like the 200, 300 units take more planning and also due diligence too, but it's really an aspect of laying out the groundworks, right? So yeah, and then I would also say uh for like the how to communicate with your team, like so for the acquisitions phase, right? So whether you have a new project in the pipeline, right? So the acquisitions team or the underwriting team is really like uh really important to explain these projects fluidly to the asset managers, right? So I always see that a little bit of barrier between like the acquisitions and underwriting team and the asset management team, and that should not be there, right? So you guys want to kind of coordinate more effectively for new projects that are coming through, because ultimately it's a matter of the asset managers to kind of take on the project. So it's like a seamless transition that has to happen because the acquisitions underwriting team is just going to go on to the next project and underwrite the next project, right? So when you have like, let's say the deal under contract, right? And settlement date is this date, right? Then it's the asset management manager's role to just literally take over the project from that point on, right? Whatever that closing date is, right? So yeah, I think it's kind of a tough process, I would say, just to start out. Like maybe like the first week or so is a little bit confusing to just get used to everything, getting all the leases organized, how to market it properly, and then also handling like that construction management phase, right? So those are like I would say some pivotal weeks in the beginning, but once you kind of see the process like unfolding, you see like the construction going smoothly, whether it's like a ground up development or just an acquisition value add opportunity. It's really cool to see it like kind of unfold, right? So that's one of like the uh, interesting aspects of it is how do I like kind of bring all of these things together and make the deal work, right? So these are the doers, like I mentioned, like the asset managers are the doers. They're responsible for the performance of the project, the project as a whole once it's like under contract and like the company or the LLC or whoever is the owner has it under management, right? So yeah, that's that. And then I would also say if there are like a few contracts to review, such as like listing agreements. So obviously leasing commissions is going to be a big expense if you have a lot more units. So taking consideration tenant improvement and leasing commissions, those are really important. So if you have listing contracts, review those listing contracts with like the brokers that you're with. Also review any other like contracts that you should have like a good knowledge of, such as the loan documents, the loan agreements, right? Review all of that beforehand. So uh, I would honestly, as the asset managers, if you have it under contract, so PSA is drafted, right? Purchase and sale is drafted, and you're in that due diligence phase, whether it's 30 days, 60 days, right? Then as the asset manager's role, just review all of the contracts that are there, right? All of the due diligence documents, just review all of it because it's better to know than to not know when things happen like out of nowhere, right? So, um, yeah, so that's that. And then we'll get into how to kind of negotiate with lenders too later on, like negotiating the term sheet. That's really important. So this could be also the underwriter's responsibility because you want to make sure that like your due diligence like checklist is really solid. So and tasks are assigned properly. So for instance, in our due diligence phase, let me just pull it up here. And I'll go through this in a later video, but really it's like a 6 to 7 step phase process, right? So here, let's go through this. So you have your underwriting phase, right? So this is literally like the deal flow of your projects, right? So performing market analysis, development budgets, financial analysis, locational analysis, and then reviewing the project with your asset management team. So schedule like literally like a 2-hour session with your asset management team if it's a larger project, and go through each and every detail that has to be addressed, right? So, and also present like an underwriting, or sorry, a due diligence checklist with them too, so that everyone's on page. And then the next phase would be obviously the negotiations, letter of intent, purchase and sale, closing, and then the property condition phase, right? So this is really important. So it would probably be more of the underwriter's responsibility to do more of the property condition and like on-site visits. So getting an external party for the PSA, or sorry, PCA, which is a property condition assessment. Having that in place, doing flood maps, seismic reports, making sure that the property is ADA compliant, right? And code compliant as well. And then making sure that utilities are in place, the whole process is kind of running smoothly. The other thing to understand, like from the underwriting phase, is just like how is the management company handling day-to-day activities currently, right? So inquire about their management team. If you need to outsource a third-party project property manager, then just talk with them and say, hey, what are some good property managers in this area? Or can I also utilize your property manager, right? So yeah. Um, and then obviously the environmental phase is really important, phase 1 and phase 2. Phase 1 is obviously just like historic reporting, and then phase 2 would be more of an on-site reporting. The legal entitlement and insurance phase, this is huge. This is probably the biggest like blockade about things to just go through. Like literally it's a lot. So like zoning certificates, certificate of completion, occupancy, other certifications, insurance, make sure you have insurance, title reports, permits, and conditions, covenants, and restrictions. We call it CCNR. And then lastly would just be lease review, right? So making sure that all of the leases are accurate and abstracted well. And then going through all the construction documents, right? Who is your general contractor? Who is your architect, engineer, any subcontractors, right? What is the construction draw schedule? And then some other aspects like engineering, utilities, and planning and design. So this is like a step-by-step process that you want to kind of bring everybody on board, like for the due diligence team. The due diligence team can include everyone, such as the development project manager, the asset manager, the property manager, and lead acquisitions or the underwriter, right? So space it out. There's a lot of tasks to go through, but make sure that everyone's kind of uh, living up to their like responsibilities and following through, right? So yeah. Um, so that was a quick overview of the asset management role. Hope you guys enjoyed. I will also be posting a property management role later on. But this was just like a quick intro to the real estate roles. So yeah. Yep. Okay. Thank you guys. If you guys want to reach out to us, it's ARG designbuild.com. This is mainly our design build company. So we handle all of like the projects through there for like the interior design phase, the architects and engineering phase. So all of that is kind of handled through there. And then also obviously construction management is the main aspect, right? So yeah, take a look at our website. You can reach out to us if you have any questions. And yep, thank you guys for listening.